So great, we are live now. Let's
Hi guys,
check the sound. Hi everyone.
how are we doing? Does the sound good? Let's check the comment section. 1 second. I think we
Let's
have
check.
slight delay, right?
Please put pluses
Yeah.
if
Sounds
everything
good.
is okay. Sound is
All
great. Okay.
all right. Hi guys, welcome today at this live stream together with Bybit and CScalp. For the people that don't know me, my name is Dirk Pennings. I work at Bybit and I'm in the crypto space since 2016, mainly active on perpetual trading and also on-chain trading. And I was asked if I want to do a live stream with CScalp, and I was very excited to do that. So I'm really looking forward today. Let's see. Let's try if we all can learn something, because I think in trading you never stop learning. And today we are going to deep dive, I think, in the basics of trading, of scalping. So let's see what we got today. I'm here with Roman today from CScalp. Roman, would you be so friendly to give a short introduction?
Yeah, my name is Roman. I think many of you already know me. I've been trading since 2016, starting from MOEX. Then I switched to crypto, as you know, because it's much more volatile. Now I'm an expert and content maker for CScalp, and today we are talking about the basics. As my colleague already said, we are talking about the strategy itself, and that I think that the topic of the strategy is the central in trading, along with the topic of trading psychology. I mean, so
Mhm.
today I want to discuss the principles of strategy, and let's say today's stream will be a kind of strategy constructor, and the aim is to show how a strategy should be built and what parameters it should correspond to.
Cool, cool.
Yeah.
Sounds good. So first question that comes in my mind, which I'm very curious for you, I think with strategy, we can point out in the different things. We can talk about risk management, we can talk about upside potential, we can talk about the downside potential, we can talk about leverage, we can talk about margin, we can talk about all different things that we have in trading. What is a strategy for you?
For me, the strategy is a complex, absolutely strict manual, absolutely strict complex of rule that you, on never circumstances, shouldn't infringe, because the market, the trading is emotions first of all, and the first really challenging target, the really challenging. Step for any trader is just to get rid of your emotions and be able to follow the rules written in your trading strategy. In many ways, trading strategy and trading system are overlapping. Many people perceive trading strategy and trading system as the same, but trading system is much broader. So because it contains many aspects, as emotional check. When you are sitting in front of the monitor, you should check your emotional stability, and so on and so on. But trading strategy is including certain peculiarities, as risk management, as the principles of the strategy, with the central point of the certain market inefficiency that you work out. For example, it could be breakout, it could be smart zones trading, it could be pullbacks from huge limit orders or density sizes in the order book. It could be spread,
Mhm.
grabbing of volatility, pipsing, and so on. But the main principle, the same. Whatever strategy you use, you should always adhere to some other elements: risk management, rules of position selection, rules of entry, rules of fixation of your profit, and so on. And of
Mm-hmm.
course, some principle, all the strategies should correspond to absolutely basic principles. Each strategy should correspond to, first, a good risk reward ratio, or it should have a really good win rate. It means that from 10, let's say, trades, good win rate implies that 8 out of 10 are in plus, and so on. And good risk reward ratio implies that you potentially earn, for example, $5 against your loss of $1.
Mm-hmm.
These two basic principles are absolutely the same, fundamental in any strategy building. If there are problems in both these parameters, this strategy will not be successful. It will lead to tilt, or even if you are managed enough in emotional control anyway, in long run it will be losses.
Mm-hmm. And I hear you saying about the different setups that you can do, like the different trading styles. Let's first pick with that. So, for example, I'm a new trader, and I want to learn how to trade. I want to research more in the trading field. How can I choose like one sector or one strategy that is going to work for me? If it's not, if it's breakout trading, if it's in the zone trading, if it's like order book trading, how did you pick your category of trading?
Just through blood and sweat. It just depends on your psychological type, because
Mhm,
as for me, personally, for me, for some of my students, people just come and should come through several strategies and understand that, for example, pipsing, it's not for me. I'm just starting to pips. I'm just starting to grab some volatility and
For the
several
people that
stop
are not
losses.
familiar what peepsing is, can you explain like
Pipsing
what
is
it?
just working inside, just without looking on the graph. You're just selecting very active instrument. You use just order book, some inefficiencies in this order book, for example, robots pushing the price with limit orders coming after the spread, or something like this. In this
Mhm,
style of trading, I am really the total zero, because I am starting reaching the tilt, reaching the boiling point when I can't um, when I can't, mm, how to say, when I have no time to make a decision. Because
mhm,
for this type of trading, you should be really uh, be a risk taker, but it's a really challenging style of trading. It requires people to have a really good sense of order book. That's
mhm,
why, for example, it's not for me. I really prefer two types of scalping strategies, namely smart zones on 1 to 5 minutes, and breakouts, and that's all I'm trading.
mhm,
Nothing else, at least at the current stage of market.
mhm. And do you think we're talking about the current stage of the market? Do you think that in the future, when we get different market circumstances, your trading style would change? And if so, in what kind of trading style you would change?
Yes, absolutely. I from the experience. From this vision of experience I have already accumulated, I see that there is no magic pill. Absolutely, even if you go deeper into one trading style, you are going better and better in this. After some time, after 1 month or half a year, the market will change, and this strategy will be working with less efficiency. You will see it in your results. You see
Mm-hmm,
that every day you getting more and more stop losses. You should decrease the volumes, trying
mm-hmm,
to get back to the previous statistics, I mean win rate, If it's hard, if it's almost impossible, you should change the strategy. That's
Mhm.
why every trader should have at least 2 or 3 strategies to be mastered in, and be able to apply it in different stages of market.
And I'm wondering because I think that there are a lot of people right now watching who maybe just started with trading. And I think in Q1 we can say we had a very profitable Q1. So I think that almost everyone in Q1 who started to trade, if you're doing not like over leveraging, uh, you probably made money. So
Yeah.
what do I see? A lot of people around me who entered crypto in Q3 or Q4 last year, and they are a little bit more familiar with the setups, and then they started active trading on perpetuals in Q1, and they trade basically on breakout, like resistance support on the 4 hour. So it, like the standard, like the most basic, and I think they are very profitable right now. But then comes the problem that they are starting to be over confident because they think they're a very good trader because they made
Yes.
money.
Yes.
And
Yes.
then they start to lose like 50, 60, 70% of the whole capital.
That was
Uh,
my story. Yes, absolutely.
I have the same in 2021 and in 2016 as well because I learned a lot and I read a lot of stories and books. And one book that really helped me was Trading in the Zone, to to understand your own psychology when you are trading. So for the people that are watching right now who made a little bit of money and still are profitable after Q1, what can you advise for them what to do right now when you are not very familiar with trading, but you see that, okay, you like what you are doing?
Yes, I think the most important thing for those who are already in trading, who making first success, is to be able to get pleasure from the process and not to be overconfident. Because for many people, the bull run is. I remember the really good phrase that I heard from my first teacher. Let's say the worst time for getting into trading, the worst time is the bull run, because you
Yeah.
will be overconfident from the first half year, because you will be able to you will be quite successful, because everyone could drive the boat during the still water. But when it's storming, when the hardships, when the hard time comes,
Mm-hmm.
um, this period shows you usually who you are. And
Mm-hmm.
when the first bearish periods, bearish markets came in force, I understood that I wasn't trader at that moment still, because I lost everything. My first $5,000 that I made from 1,000 was diminished in one day, the day after I decided to quit a job. And
Ah,
another one really important advice, a piece of advice that I can give, especially for beginners: always have additional income. Always have a job, or at least additional income that will be enough for you to just to make a living. Because mm, having no this opportunity, having no income, will be creating some really tough pressure on you, psychological pressure, and it will be impossible to start earning from trading, because it's really hard to go through this pressure. You should
mhm.
always have a plan B, always have a financial pillow or something like this, stable income. And only after this you come to trading. You should understand that every month you have, for example, $1,500 income, and $200 you can afford yourself to lose every month. It will be okay. And the last
Yeah.
piece of advice is just trading $10, unless you can turn it to $50. No reason to trade $500 and lose it again and again when you can't when you can't grow, when you can't double it. So
Mm-hmm.
it's really reasonable to don't rush to earn money. It's reasonable to trade only the minimum money, the minimum deposit. $10 will be enough, especially in
Mm-hmm.
futures
It's a very
preparation.
good quote which you mentioned, that a lot of people can make money in the bull market. I think, to be honest, not to disrespect all our traders and investors, but I think everyone can make money in the bull market. Right now, if you pick like the top five most traded altcoin bags, no, you buy them as spot and you hold them for 1 year, you're profitable. And people start to
Yeah.
think, oh, now I'm a profitable trader, so I can do this or that. So I really can relate with you on the point that the hardest part to start with trading is definitely in the bull market.
Yeah.
So if we're going to the basics, I think the basics always comes down to risk management, right?
Yeah, absolutely. It's time to demonstrate my screen, I think.
Cool.
Great.
I'm excited.
Let's start from just a moment. We go to the basics of risk management, and as I usually say, that our strategy and in partially our trading system consists of many elements, and first and most uh, important element is risk management.
Mm-hmm.
And the basics of risk management, many people think that it's something that should be difficultly calculated, but in fact it's just your deposit. Let's say your deposit $1,000, and the basics of risk management is just a drawdown, daily drawdown, and the drawdown for trade. I usually recommend to use 5% daily drawdown. You can't lose more than 5% of your deposit. For example, if our deposit $1,000, let's imagine 5% will be $50. This is your limit for your trading session, daily trading session. If you
Mm-hmm.
lose 51, you just stop trading until tomorrow. I know
Yes.
that it's really easy to to talk about this, but it's
So,
extremely hard to follow
so
this.
from the basics, you're saying that okay, when your portfolio is worth $1,000
Yeah.
and you're going to trade with $1,000, then the max drawdown, so your stop loss is not never more than 5%, which is
Yeah,
equal to
yeah.
$50.
It's a series of stop losses. I just just the only beginning. I mean that 5% is a daily drawdown, and of course it should be at least 0.5 or 1% per trade. Each trade
Mm-hmm.
of any strategy you use, it doesn't matter. You just should set up the risk per trade. The risk per
Yes.
trade will be 0.5, 1%. So it will be 5 or $10 per trade. So
Mm-hmm.
you have five chances just to earn money, or if you lose all these chances, if there will be 5 stop losses in a row, it's absolutely normal. You stop trading, and
Mm-hmm.
I usually call it the tomorrow effect. It means that when you stop trading, uh, the probability that you will compensate this loss tomorrow is higher than then you fail to stop trading and continue
Yeah. Why do
because
you think that's it?
huh?
Why do you think that is that it's better to start tomorrow? What's your thought behind it?
Because when you have several stop losses in a row, you absolutely that's true. That's the absolutely truth. I think you need a rest, you need a break, because several that's just a human being. It is just a human psychology. Our brain trying to peg positive moments with positive emotions and vice
Mhm.
versa. When we have negative events, our brain just pegging these to negative emotions. That's why when we have several stop losses in a row, we are coming closer and closer to tilt, emotional trading. That's why daily drawdown and drawdown per trade is absolutely basics of risk management, because every time you standing into the trade, you have open trade, you are absolutely calm, because when your risk is calculated, you know that your stop loss will be $10 every time. There will be no surprises. And if you have no surprises in terms of losses higher than you expected, there is no tilt. That's the secret. It's absolutely simple, and I think it should be printed as the basement of trading. So that's all. For example, if you trade breakouts, or if you trade smart zones, every trade you enter, for example, you calculate in advance your position. For example, you open the trade when you're coming to getting closer to breakout. You open the trade with, for example, $3,000 or $4,000, and let's imagine you calculating the stop loss. That activation of this stop loss will give you minus $10. That will be your first drawdown. The same with the zones. It's absolutely easy. I really recommend start following this as soon as possible, because the main mistake of people is that when they trying to trade, when they're trying to make a new trade, they do not in advance what stop loss will they catch. And when they catch the stop loss that they didn't expect it, there is a tilt, almost tilt, because the first thing coming to your mind, I need to compensate it. They try to increase leverage and go, and this avalanche like lose of deposit then.
True, because it's not a trade based on the data or the chart that you're seeing, but it's a trade based on your emotions that you want to make it back.
Yes, it's just gambling. From this point, gambling comes. Yes. So then we can come to, I think, the next point. Yes, the three elements left. What we just talked about, the risk management and the rules of entry and closing trades, and rules of setup selection. Let's talk about setup selection, because other two topics logically comes after. That setup selection is absolutely logical thing, because when we are talking, for example, about the breakout, what rules we should follow, it's absolutely the basic of any scalping strategy. Breakout, I think it's the most popular. We should select only those setups that we see on the market that correspond to our rules. In breakouts, for example, the rules are simple: the clear level, not infringed level, really good volume of the market, and the instrument should be active, and that's all. All other instruments, all other setups, even if they are looking really good but missed only 1 point, we are sorting out. For example, we have a really clear level. We are coming to this. We have really good volumes here, and we have daily volume higher than 300 millions for long breakout, and no less than 200 million for short breakout. If all these 3 points are okay, we are accepting this setup, and we are placing it on our watch list. We are expecting the trigger point. I mean, for example, when the price coming to the level for the first time, we are entering with our leverage, selected leverage according to the risk management, as I said, and we and that's how we select. the instrument. If, for example, we got really good setup, several touches, but here we see the small infringe that there was a small false breakout. In terms of breakout strategy, what it should what information it should contain. It means that here we infringed the level, we activated some stop losses, we broken the structure, sorry, and in this case the formation is not so reliable already. When it's not so reliable, it's decreasing the probability of a really good workout. That's why we should strictly select the formation. So in this case, we cancel it, we sort out this, and searching something only like this. So the next two topics are quite obvious, or how we enter the position. For example, we enter by the market, or we placing limit orders and fixation. For example, in a breakout, we are entering by the market in the moment when the tape is really active. Tape, for those people who don't know what is the tape is this part of the order book where the market orders are displayed. It should be really, really active. It means that the market and the participants are really ready. They are greedy. They want to catch this breakout. And of course, in advance, we should place limit orders for fixation on our aims, potential aims, because the breakout could be so impulsive that that's just a half of the second it made a breakout, and then the price returns back. And manually, you have no chances to do something. That's the matter. That's
What
why
do you
we
mean
should.
with that? Like manually, you have no chances.
Because sometimes the breakout, this impulse of the price based on the stop losses activation is so fast that sometimes you can will fail to react, to close the trade, and it just activated all the stop losses. Most part of breakers, or how to say, scalpers, just fixed their positions. That's why this creates the opposite movement back. And most people who try to start trading the breakouts really have some problems with fixations. They said, I even have had no chance. How what should I do to be able to fix in time? The only I think the most effective way is just to place limit orders in advance, just to be able to fix in case of this really fast impulse. So when we're talking about these two blocks, risk management, rules of selection, entry, and closing positions, we can take one of my favorite. Sorry, it's a call. We can take one of my favorite strategy, smart zones. It works in. I usually trade it in 1 to 5 minutes time frame, but frankly speaking, it works in any market. It works in any time frames. I think that soon there will be a video about the mechanics, because I think if I start explaining the mechanics, it will take, I think, at least 20 minutes. There will be additional video about this. And let me just show you the very basics, the very basic principles of this, how we should work. For example, it could be the order block or small zone. Graphically, it works like this. For example, we see some kind of impulse. The instrument is really active. The small remark: we should, as far as we are scalpers, we should trade only very active instruments. And we see the active instruments, then we see the small threshold, then again impulse. So we pay attention to this threshold. This is the zone. The price usually comes to this zone. Of course, it should be accompanied with the higher than average volumes. When the price comes to this zone again, usually it pulls back. We should wait for this impulse breaking of the structure, and then when the price coming back, and another important moment, that when the price coming back, the volumes shouldn't be higher than these volumes, the volumes of price exiting from this zone. Let's imagine we have such kind of normal volumes. Price is getting back to this zone. So this is our entry point. Here we have our stop loss. And let's come discussing every element of our trading system. First, the formation. We select only those formation with really clear threshold, really clear zone. I will show you the examples later. Really good volumes. The instrument should be active with an adder from 1.8 to 5 or higher, and so on, no less. And finally, it should break the structure and then coming back with the volumes higher than these maximums. That's all. That's our rule of setup selection. Then the risk management is the same absolutely. We have $1,000, for example. We shouldn't have stop loss higher than $10. With a stop loss below this zone, the price is coming. Here on the border, we have our limit order for purchase. We calculate it in advance to have a certain leverage to be sure that activating stop loss will be no more than $10. And when our position is opened, we place a take profit on the first over high to refresh the high, or at least 2-to-1 ratio. For example, if we have a zone of 1%, we should at least take profit to 2% of movement. That's all. It will create a good risk reward.
And at what point do you move your stop loss to break even?
That's a really good question. For example, it depends on the situation. If, for example, we also should look back at the BTC. For example, if the BTC is trying to break some level, we see that the behavior, the mood, or so-called mood of the BTC is to going long. We could be more confident in the setup, and we should leave stop loss behind the zone as long as possible, because sometimes we will have something like this, but in long run we will get a really good movement. Of course, we can fix, for example, 50% on this part on 2-to-1 or 1-to-1 ratio, and then we should just give our profit chances to grow. We can go to break even after we have fixed something already, and when we are confident in this trade. But in sometimes what principles I follow, placing stop loss in the break even. For example, if I have 3 stop losses in a row before, I don't want to risk. I really want to get a one good trade, and I remove stop loss in a break even when I have 0.5 or 1% of movement in the green zone already in profit, I mean, because if the price coming back to my entry point, in fact, the probabilities of working out is getting lower, because ideal workout is when we have a instant reaction, because when we're getting back several times, it means that we have quite really weak participants who are pushing price back here. Usually it should be something like this. So that's all. At least along with this kind of setup, I mean the threshold zone, there is the second one, the order block. The principle is the same, but it usually look like this. I will show you. And all the beginners, some kind of level. Then there is a candle, something like this. And then we have the opposite movement. Here we have the order block. The order block, it's called order block because there are many huge player or sometimes and retail players, many orders in this area. Let's watch the example. I really see the example here. For example, we see here the order block itself, because there was a kind of level, several touch to this level, then we infringed this level, and there was the change of direction. Here we see the order block. We can as well use a special indicator. I am frankly speaking do not use indicator. I don't like indicator, but sometimes some indicators just help us to watch or to detect something in the market. We turn on this order block. Here, unfortunately, we do not confirm it with this detector, but anyway, it doesn't mean that we can't work it out. So what we should expect? We just stipulate this area, and in this case, I would probably skip this situation, because the price has come too far from this zone, and I think those orders that should be reliable in this area, they are already canceled, many of them, for example. But let's imagine that we do not have this part. For example, if from this point there is nothing here, from this point we come to this zone, I would probably short from this zone with a stop loss here. Let's check other parameters. We have volumes here higher than average, because average volumes we have on this level, I think, and other parameters as well are good, except we can't judge the activity that was here at this moment. But if at this moment the activity was really high with an IDR of more than 2%, for example, that's ideal setup for smart zones. That's it. Maybe we can switch to the examples of the trades.
Yes.
Or maybe we have some questions. You have some questions, or on our YouTube.
How do you react? Do you react, for example, or do you wait? Right now, I think one very big indicator is the grayscale BTC inflow. Do you check those parameters? Like, okay, what's the global circumstances? What's the S&P 500 doing? Because I think in the end, if we're trading altcoins, we always should keep an eye on Bitcoin, and Bitcoin sort of is still sometimes correlated with the S&P 500, or like the global index market. How do you see this? What's your opinion on this?
That's what I like, that you always ask really good questions, really important questions, especially for beginners. I usually trading altcoins. I always watch the correlation. I watch how BTC behaves, because, for example, if we trade long setup, if we
Mm-hmm.
trade long zone, and I see that BTC is coming back, the BTC is coming to support zone, to break out this support zone, I usually stop trading. I usually cancel this trade
Mm-hmm.
in loss or in profit. I just close the trade, because if we are breaking the support on the BTC, in most cases we break the zone as well, long
We see
zone
it.
in our case. Yes,
Speaking
but
of that, we're seeing
hmm?
it right now happening. I think you see that Bitcoin on the 15 minutes, we making a dive, and you see that it takes
Yeah,
all
yeah,
the altcoins with them.
yes.
Uh, and that, I think, I'm not sure, but I saw yesterday the grayscale Bitcoin inflow. It was very low compared to the other weeks, so you can see that the buying power is decreasing from the institutionals or the retail investors. Of course, we have like historical data points like the BTC halving, where we mostly have a dip up front. How do you view historical data in your trades?
As far as we are dealing with scalping, I usually prefer monitoring only live data, just something very, very relevant to the current moment, as just a
Mm-hmm.
BTC movement or BTC, just to extrapolate or predict something, just 1 hour forward for BTC movement, because other things are more relevant for investors,
Mm-hmm.
as far as, for example, trying to find the correlation between S&P and BTC is, I think, for scalping is just wasting of time, because when
Yes.
you are trying to collect all this data, you will lose time, you will lose some setups. That's why we usually watch only right here and right now elements of analytics, like
Mm-hmm.
BTC, like some vertical volumes, and that's all. And maybe some upcoming totally forgot the words, upcoming uh, oh god, just sorry,
Looks.
uh fundings
Ah,
sorry,
yeah,
upcoming
yeah, yeah,
fundings,
yeah, yeah.
yes, and that's all, because it's scalping, and usually the decision is made in very short period of time. But
Mm-hmm.
if we are talking about investing or smart zone trading in terms of positional trading, yes, I think the instrument that you just mentioned are really reliable and relevant.
Mm-hmm. Okay. Okay. And if I was a beginner and I wanted to learn how to trade, like I want to learn like everything from the whole book, from the whole story, from all the indicators, from everything that you just mentioned, what can you advise for a beginner trader who just starting his trading journey?
I think the more narrow your specialization, the faster you will get to result. Because when you're trying to apply all you know, usually it will create unique traits. I
Mm-hmm.
call it unique traits. When your trait is unique, when you can't repeat this trait 1,000 times on different instruments, usually it creates negative mathematical expectations, because
Mm-hmm.
all your traits should be absolutely similar according to your trading system, according to your strategy, and it will create in the long run really good profit. But when
Mm-hmm.
a trader tries to mix all the kind of strategies, all the knowledge, uh, on according to my experience, usually it's really hard to come to some stability on such approach. I usually advise people just to concentrate on very narrow specialization. For example, if you're trying to trade breakouts, or the only things you need, just trying to watch clear levels on very active instruments and monitor the activity of market participants. That's all. You
Hmm.
don't need additional instruments like indicators, feeble levels, something like this. Don't
Hmm.
mix too much, because um, the more simple the strategy is, the more easy you will be able to follow the rules, and
Hmm.
the less there are less probability that the tilt emotional trading will come.
Hmm.
The strategy should be simple.
Okay. And where can beginners who want to learn how to trade, where can we find all this information? How can you advise them in that? Because I think the whole YouTube and whole internet is full with trading advice and courses and stuff. What can you recommend to new?
Yeah, this is a really as well relevant question, because unfortunately we are living the age of informational waste, because many people, not just the traders, they are just the content makers.
Yes.
They can really harm your bring you how to say intellectual harm because many people really don't know the topic, trying to give advice,
Hmm.
trying to grab some views, and trying to make content, just a content.
Yeah. Especially now
uh,
the bull market returns, you see it a lot, right? Since the topic is becoming hot and people want to grow their social following, for example. So they start to give out trading signals or
yeah,
whatever the
yeah,
case is, and that's not how it works here.
yeah, and there is a lot of information, and usually people trying to browse this information, they have a really mess in their head. uh, the information is not structured. I
Mhm.
What can I advise? I advise just to subscribe to such channel as the CScalp, because as a content maker, I'm working with the CScalp not because some contract conditions, yes, but because the approach of the CScalp, where the
Mhm.
people usually make content really useful for beginners, with no
Mhm.
something intellectually harmful, as I said, very
Mhm.
structured and for free. So you should select the direction that you are trying, that you really want to adhere. For example, breakout or uh, smart zones trading, and watch all the materials on the reliable channel, as for example
Mhm.
CScalp or Bybit, as a official representative of the exchange. I'm sure that all the materials are reliable,
Mhm.
uh, official resources, reliable resources, with the traders who are showing their trades first of all,
Yes.
because
Mhm.
it really demonstrates the expertise of people who are providing this content.
Mhm.
I usually prefer when people asking how I can understand whether this content make is really good or bad. Just the answer is really simple. Just you should check the real results, the real trades. For example, we hold live streams where all the traders of CScalp live trading, showing the trades they are
Mhm.
trading with their deposits, and so on. This is a way to check the expertise, because when people just showing some indicators, watching on the history, it's absolutely another story.
Yes, I agree. Or they're showing P&Ls or stuff, like in
Yeah.
percentage, but that or can be demo money, or it can
Yeah,
just
yeah,
be,
yeah, yeah.
a
Yes.
20x leverage with 0.1 cents margin, and then they're showing off with, You know,
Yeah, it
the
could be falsificated. That's why the best way is just to see the recorded videos of trades or something like this. The process that could be falsificated. So
Mhm.
on this point, we can, by the way, switch to the traits about the zones, and I will show you several examples. If there are no questions, or maybe we
As
can switch to questions.
far as I can see, I was just checking. Let me check again.
We have a lot of questions in YouTube. Maybe we will answer several of them
Yeah,
as
let's
it's
go
about.
there.
We have a help of moderator in YouTube because there is a kind of spam. Hi, CScalp, how to increase size of order in the tab. Uh, I think you just should watch the full guide uh, because I think as far as our stream is devoted to another topic, it will be unreasonable to spend time on this. Would this video be available? Yes, it will be available. Uh, Derek123 is asking about the position you occupy in Bybit.
I'm on the marketing team and I'm on the Web3 team.
Great. What is the best time frame for scalping? It depends on the strategy, but usually scalping implies 1 minute, 5 minutes. From 1 to 5 minutes, even a 30 seconds time frame is um, suitable. So great, we just answered the questions. I think we can switch to the examples of the trade.
Yes.
About 10 or 15 minutes left. Just a moment.
Yeah, 10 minutes, I see.
Uh, so here we see the interface of the CScalp, and the principle is the same. I showed you the zones from the very beginning. When a newcomer just comes to trading zones, it's hard for a beginner to select these zones, to see them on the market. But after some practice, it will be really easy to understand. In this case, for example, by the moment I started recording this video, that's a popular video. I really showed this thousands of times because it's really demonstrative in terms of setup selection, how the price is coming between moving between the zones. As you see that I showed you before, this a kind of threshold. This is the zone. There was the first trade I worked out. The zone itself, the stop loss was here. There was a first workout, and here we have another zone as well, the order block that I showed you. And from this order block, you see the reaction. My stop loss from the very beginning was here, but by the time I start recording this video, I was already at the break-even point, because as you see, there was a really dangerous situation on BTC. There was a downfall of the BTC. That's why I decided not to risk. And when there was a first chance to get into the break-even, I just did it. I'm showing the zone itself. The reaction was instant, in fact, but frankly speaking, there wasn't the full potential of this trade, because the full potential of this trade implied at least 2 times of this broad size of the zone. I mean, for example, if it's 1%, at least we should take play stop take profit, somewhere here. But as far as the BTC is coming lower and lower, I decided to close this position Maybe there was about $100. But anyway, the reaction was quite clear. The reaction was instant and really clear stop loss, really clear targets, at least before BTC was going down. Okay, maybe some questions, or we go to the next video. I think it's quite clear and really easy
Yes.
easy to find. Let's
No.
watch this one. Uh, Unfortunately, I didn't record it the zone itself because here we can't see the left part of this graph. Oh, sorry. Here there was the zone. Let's just continue this drawing. Just imagine here we have a kind of threshold, the zone. There was an impulse. There was a small accumulation. Then again, we see impulse, and we got back to this zone as well. The volumes are on the rise. The price coming back to the zone. Here there was the limit order. Here there was stop loss. And we are waiting for the pullback from the zone. I decided many people trade the zones by loading inside the zone with the several limit orders, but I decided to load with very single one limit orders because sometimes, really in many cases, we do just the same. We just touch uh, 1 point touch to the first very border and the pullback. That's why I decided just to place only one limit order.
Can you maybe zoom in a little bit? Is that
Oh, I don't know how to zoom in here, frankly speaking. Uh,
You on Mac or on Windows?
Windows.
Okay, then I don't know. Okay, never mind.
Here you can overview. Just a moment. Just a moment. Here we see the zone here. I will show you. It's the really small zone. On 5 minutes time frame, it's hardly visible, but on 1 minute, I was searching it on 1 minute time frame, and on 1 minute time frame, there was okay. Frankly speaking, there was small infringement of training system, but I just took a risk. Why there was infringement? Because here we already had the price reaching this zone and getting back. Ideally, we should have been trading this only this opportunity. I mean, here we made a zone, really good volumes as you see. Then the exit from this zone, and we get back for a moment. There was ideally that should have been activation of our limit order, and then we fix here. But I missed this opportunity and used another opportunity when the price touching the zone for the second time. The probability of working out is much lower. But I took a risk because that day I was already in profit. I was risking only on that profit. But
Yeah,
anyway,
that's
as
good.
you see,
Mhm.
sorry, as you see, this. Oh, sorry, I was mistaken. There was a 15-minute zone. There was 15-minute zone. I just uh, misunderstood this setup. The zone, in fact, was ideal, as you see. The threshold, this kind of threshold, the outbreak of the price from this threshold, as you see, and then we're getting back to this zone already because we have already 3% of movement, and ideally there was our aims, to where we waiting to come, the price to come. And here you see the zone itself really clear and understandable. In this case, I don't remember, there was already, yes, the take profit according to the closest imbalances, 0.7. They're already a really good profit. Here we have almost $200 in total, 2 trades, and on the really good market you can have up to 8 or 10 situations with 7 take profits and 3 stop losses.
I think that's a healthy ratio. That comes close to the healthy ratio that you explained, right? If you do 10 trades, you
Yeah.
need to get 8 TPs and 2 stop losses.
Yes, absolutely. But taking into account that you're trading only really active market, because there was on our today's morning session of trading in with my students, there was really inactive moments. We took 3 situations. There was a 2 stop losses and 1 take profit, and there is nothing to do on such market. We should just make a break till the American session, for example, check the integrated in CScalp diary screener, for example. If we see that the market is active, the average nether is about 3-4% on 5-minute time frame, that's okay. We should switch between instruments and search something like this that we see here. So as you see, graphically, it's not very difficult to dismantle, to detect these zones. They are really visible, clearly visible. They looks like small thresholds on the way of the main impulse. Then we're getting back to this threshold, and in many cases, in 80% of cases, we have a pullback. Of course, there are many of peculiarities in terms of the trade support. When you are in trade, you should pay attention to many peculiarities, to many factors. But I think we are limited in time just to dismantle all the peculiarities. In general, the system is as you see, and it's simple. The system, this trading system in general corresponds to all the factors that we today discussed. First of all, risk management. In fact, any strategy could be adjusted to risk management. Then setup selection rules, rules of entry, and rules of setting targets and fixations. That's all. And if you always follow the rules, in the long run, you will be profitable. Of course, there will be hardships. There will be weeks, days, or even weeks of losses. But in this case, your character is shown. You shouldn't tilt. Just keep following the rules, and in long run, everything will be okay.
That's very good advice. And at last, to close down this stream, what do you think of BTC in Q2? There is a saying which is more, I think, from the investor side. It's sell in May and walk away. I'm not sure if you're familiar with that. What do you think on the higher time frame of BTC? What can you expect? What do you think?
I think we just coming to, first of all, we are just coming to the really extraordinary and important historical moment, is the BTC halving. And
Yes.
before the BTC halving, as we see, the market seems to stay in a waiting what will be happening. But in my opinion, I think the really huge institutional players, some percentage of them will be fixing during this during this period. But
Mm-hmm.
anyway, I see the BTC from the very positive angle. I think there will be a new second breath, the second breath for the crypto industry. I think we will assault at least 80,000 soon.
Mm-hmm.
According to the upcoming event, according to the uh, technical analysis. But okay, we just wait and we will see what will happen.
Mm-hmm. Let's see. Let's see. I'm really
Yeah.
curious. Thank you, Roman, for your time. And
Thank
I
you
was
too.
checking the YouTube section. There were no more questions over there. Maybe we can do this on a repeatedly scale to educate other people as well. I really enjoyed it.
Yeah,
Uh,
me too. There was really great conversation. Thank you for your attention. Thank you for
you're
coming
welcome.
to CScalp.
Uh, Of course. Guys, please follow us on Twitter. Follow CScalp on Twitter. Make sure you check everything what we are doing. And I think the most important lesson that we all need to keep in mind, if you're a trader, if you're a beginning or an expert, always stick to your plan, stick to your risk management, write it down, put it in front of you on a page, on a piece of paper, and no matter what, don't cross your own rules. Roman, any closing words for the stream?
Yeah, I wish every trader to succeed in this new bull run period, in this new bull run market as well. Always have your system, always have your rules, and um, do not hesitate to ask questions in comments under our videos,
Mm-hmm.
offer some ideas concerning next videos. So we will be in touch and helping you to make your trading better and of higher quality.
Cool. Thank you very much. Have a great day.
So
And
thank you all. Wish you
thank you
good
all.
profits. Wish you good
Bye bye.
trades. Thank you.